Welcome to our Switch On Picks of the Week. This is week 2, 2026. We've got some big markets for you lined up. We've got key events out of Iran. Maybe the regime falls, maybe it doesn't. We've also got Venezuela still very much in play, and the United States Federal Reserve is actually coming under a DOJ investigation for the first time ever. So there's a lot going on this week. We've also got CPI on Tuesday. We've got retail sales Wednesday, and pretty much as more of a calm late week. But honestly, after this much news, this much breaking news, you're going to see action each and every day on the market. So we're going to go ahead and break down your energies first. We're going to check in on metals and then show you maybe a Fibonacci expansion sequence on the US 500. So all right, let's go ahead and get started. The first one is the UKOIL. Now, just before we are filming this, about 2 hours ago, Trump announced fresh sanctions on Iran trade partners. That has sent Brent crude oil up a little bit higher on what we would call pretty much a bullish market driver. The idea being that maybe some oil is going to be constricted from the international trade, which is very much what UKOIL tracks. Essentially, it's based on the North Sea Brent crude oil contract. It's viewed as more of an international barometer of oil prices. So Iran sanctions typically are going to have a pretty good impact on UKOIL with respect to USOIL. All right, UKOIL, relatively simple technicals. You got a nice spike high that developed back in June, and then you sort of had a low that developed, a nice swing low there in December, and you've got the 38% level of the top side, which is right around $67. It's nice resistance, and you've also got an EMA, 13-month EMA up there at 67.38. That's key resistance, and then support down to the bottom side, 2025's low, 58.44. We think that those may still come into play, but this geopolitical angst has to subside first, or else you're not going to see the big bearish sell-off that we've been looking at for quite some time. WTI crude oil, US oil, very similar. 2025's low still in view as downside support, maybe a launch point to the really bearish crude oil market that many believe is on the way. 54.98 there, and then the key level of 60 is fantastic topside resistance. Right now, we've seen this area tested about 3 different times on an intraday basis. We think that potentially, if that does hold, it might be a reversal point. If you break above 60, then you're probably going to stretch your legs maybe up to 62.50 and be a nice washout of retail shorts. A lot going on in the crude oil market, so stay tuned. We cover it each and every day because it's a couple markets that are absolutely happening. Natural gas right now. Interesting technical picture. I've chosen the weekly chart because it gives us a good look at the fall seasonality. Typically, you see bids hit the market in natural gas during the fall months. The reason why, people and businesses are heating their homes with more natural gas. Consumption's up, demand's up. Price what? Price goes up. So what you have right here is you've got a nice big rally in line with fall seasonality, beautiful, and then you get the big corrective candle, the big red candle that comes across the board in early December, and that broke this trend line from yearly lows, or right there, this low on the 13th of October, right up to these relative highs up in early December, and then you broke that. So right now, a bearish bias is interesting. I would say that it's probably a pretty good trade. I don't know that you want to hold shorts for any length of time this time of year, especially given the geopolitical situation. A lot of things could send natural gas up in a big, big way. But right now, the bears are sort of winning over the last 2 weeks. Maybe a pullback scalp somewhere in the neighborhood of 36.98. It's nice weekly topside resistance. And then downside support's interesting. Probably looking at that 3 level, probably looking at 2025's low down there at 26.39. Interesting market, a bearish bias, but I would say a moderate bearish bias. Seasonality is not much help right now. The dead of winter in the northern hemisphere, typically that means demand is going to be up for natural gas. Supplies typically lag, and given the geopolitical situations, I'm sort of skeptical about the bearish side of this market, but it's definitely been a winner since that big red candle in early December. All right, our metals update. We covered gold and silver last week. Let's take a look at how those calls went. We talked about the cup with handle formation, a very, very strong chart pattern when you're talking about really a bullish breakout scenario. Gold, right there, there's your initial high, there's your pullback, there's your second high. That's the formation of your cup. You've got 2-day compression, that's your handle. And then there was your breakout really last Friday on the 9th of January. And then you're looking at the 12th of January, the weekly open, about a 2% gain. Right now, it's very difficult to argue the bullish side of the gold market. Pullback zone right around 45-ish, maybe 45.50. More than likely going to be robust support down there. We may see it on CPI's release tomorrow. More on that in a minute. Top side, maybe targets. 47.50 is the next big round number that's up for debate. And then after that, it's 5,000. So you need to really be careful if you're shorting gold right now. This is an explosive market to the top side. Another precious metal that is explosive, silver. Everybody's talking about silver. Everybody wants a piece of silver right now, and it's posting some of the biggest gains that we've ever seen in the market. Truly a monster breakout, up over 40. We're now printing 85. The wheels are definitely off of any sellers. The short squeeze, whatever you want to call it, is on. Right now, the long side of this market, the bids are winning almost every day, and they've won the last two sessions in a big way. Cup with handle, initial top, pullback, secondary top, compression break. Very simple. You'd love to get a pullback down here. I don't think we're going to get it, but if you do get a Fibonacci pullback off a swing high on a daily time frame or maybe even a 4-hour time frame, probably a pretty good trade. Watching topside targets potentially up at 90. I don't think much at 90. I think 90 might fake us all out. I would be looking more at 95 and 100. I think this zone right up here is probably going to be at least an intermediate term top for that silver market. So definitely keep an eye on those numbers to the top side. As far as our last market goes today, we've got to have an equities market in there. Here's your indices: US 500, Fibonacci expansions or extensions. Interesting tool. One that I've used some over my career. I'm not a huge Fibonacci extension person, but they do give us a great idea of where potential targets could be in this market. So right now, here's the deal for the US 500. We took January's range, we ran an extension sequence, and you can see we have some topside targets. But the 10,000-pound elephant in the room is definitely the key level of 7,000. That is the level. It's setting up a short-term resistance. If we see that level break, then we will immediately have a bullish bias, a heavy bullish bias, running to probably one of our targets, which would be up there at the 161 levels, about 7,086, 7,100, and then the 261 level up there is right around 7,250. So there's a lot going on here. To be honest, I am partial to that 7,250 up there. I love quarter handles. They're my favorite. I would be looking at 7,000, 7,250, 75, 77.58. That's the way that I would see this progression unfolding. Can we get there this year? Up to 8, I think anything's possible. If you get the right rate cuts, maybe cheaper energy, it really is set up for a US 500 boom. But first and foremost, 7,000's got to get out of the way, and we'll take a look at how some of those topside targets fare if we do get that breakout. Okay, it's week 2, 2026. It's early. The action is hot and heavy. Very fun time to be in the markets. We've got Iran. We've got Venezuela. We've got a DOJ investigation into a sitting Fed chairman. I've never seen anything like it. I'm excited. Join us for CPI Live Tuesday. We start 10 minutes before the release. Check your local listings. That's a big one. Retail Sales Wednesday. That's a big one. Thursday, Friday. It looks like they're going to be tame on the economic calendar. Not so fast. With this much news, anything can happen. I expect heavy volatility each and every day. It's a great time to be a trader. Who's got it better than us? Nobody. All right, everybody, that's it for the Switch On Hot Picks for Week 2, 2026. Trade the action well, and we'll see you in the markets.